The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday. It is the 15th of November. We're looking at mid-month. And what are we doing mid-month? The Dow has made a new recovery high. Look at this weekly chart from the low of 286660 that was on October the 13th. Look at the weekly chart in the middle here. If I can get the mouse to move. There it is. We've got one candle. That's the low candle. But then from that, we've got 1, 2, 3, 4, 5 candles making higher highs. It's still a leg A in the Chapman wave methodology. Now, we've seen other times where at a peak A or a B, there was a failure pattern and you got that arch that curved all the way around and took out the left side low and went even lower. So this is really important. Why? Because the stochastic in the weekly chart is 73%. If by end of the week, by Friday, and that's a long time in this kind of a market, if by Friday we're able to see it hold above 33,200, 33,000 support, then all of a sudden you'll find that the stochastic is possibly getting very close to 80%. If it gets to 80% and flattens out, that's what you want for a bull phase. So we haven't got there yet. This is just the start. And the monthly chart really has shown a tremendous amount of strength in the last two candles, where we've got a whole 2 weeks or more to go in the monthly candle before we can even discuss it, because you have to wait for the candle to close. It's a monthly candle. Same with the weekly candle. So what we've got here is that there's catch-up. With the Dow is up 0.88%. The S&P is up 1.53, and the QQQs are up 2.37. So we finally got that catch-up that I was talking about, that you needed to see. The general can't lead without the troops. Well, they can do it for a short while, but they can't hold on for very long. So within that context, let me just run through a couple of things. I want to get this out the way. So Dow made a recovery high, pulling back from the high, but still up 296 points, 300 points at 33,830s. The S&P is held on to most of its gain. It's up at 4,017, up 59. It's called 60 points. It had hit 40,028, so it's just 9 points off that. That's nothing. But it is stalling, which is what I expected, to have some kind of a rotational action that I said to subscribers to my opening call. There should be some kind of rotation here that suggests that while one of the indicators takes a little bit of a breather, the Dow's been the leader. Maybe now it takes a little bit of a breather, so the S&P plays catch up, not catch up, but catch up, and the Qs start to lead somewhat. And in that regard, look at the Qs. 1, 2, 3. There we go. Weekly chart, the one in the middle, is touching its inside track repellent zone. It's in a leg D, little doji candle so far. The day's just begun, 40 minutes into the trading day. We're up 6.76 at 292.18. This is the kind of rotation we wanted to see. Stochastic in the daily is at 85%. MACD's good. Price is way above the 9-period moving average, which has 279 as support. 14 has 277 support. Green is above the 14. All very good. And now what we're looking at is, I have to put this together, the SMHs. Why on earth I did not give subscribers another entry point into our 3 times long, that SOXL. I discussed it. We had a peak D pullback to the 180 level in the SMHs, and the 3 times long would have just been fabulous, because the semis seem to be saying, and look at this, it's almost like a 1-to-1 to the upside. I'm calling this a leg F. It could be an alternate count at this point, but really I'm calling it an F in the daily. The weekly is way above the congestion area in the 218, 215 area from previous rallies. Most importantly, what we're looking at here is a brand new leg A, and the weekly chart actually with that long-legged doji candle from last month. This is very nice. For the first time it has the possibility to close above the 14-period moving average in the monthly, which is right where we are at 228.47. So we'll see what happens. And it's bumped up against the 200-period moving average. Today went way above 228.34, up 9.63, up 4.4%. That is so good. Now, it's fascinating. I've been talking about this since we were going along all the way in the last phase of the move down and the diamonds. Some days we had a nice profit, and then we got out of it. Some days we took a tiny loss. Some days we took both a loss and a gain. But eventually we got it exactly right, and we are along the diamonds from the day after the low that was made. We are along the 3 times along the UDOW. With really good gains. We took off about a 40% gain the other day in just a very small position, trying to keep as much of the core as possible. We want to add that back at some point in the next week because I think from what I'm looking at, even though with the inflation news this morning, the market really took it very well and is screaming to the upside, I still see a little bit of a consolidation going on over the next couple of days. Let me just show you something real quickly here. Look, this is the action that we're looking at in terms of, is that a spike or is that a spike? Look here, let me just roll this. This is the 1-minute chart, E-mini. Managed to get a couple of these little turns to the downside, was stepping aside, waiting for the news to come out at 8:30. And look at that spike. That went to a single leg A, and it didn't have the Eiffel Tower, which is the pattern that I talk about, that when economic news comes out at about 8:30, sometimes you get that tremendous spike to the upside and then gives it all up and it goes straight up and straight down. Looks like the Eiffel Tower or the uppercase A, and comes back. Instead, what we've got here, it went to a B. Oh, I suppose I could have counted this as a continuation, F/B. But I didn't really care about the notation as much as the pattern that would form. And when it stalled, we started to see the slide down. And that slide down, I'll put in some fib numbers. These days I know so many people use it. I tend to use it in a certain way, just some of the fib numbers. The one I love is 300%. On a big expansion up or down. Anyway, so it came down, it went to the 38.2, and then it went sideways. It made the H, why is the mouse bouncing like that? It made an H pattern to an M pattern, but it kept holding. You know, my rule of thumb with a rectangle formation, it can last a lot longer than your patience. Suddenly it attempts to break to the upside. I should have made this a little bit lower so that you could see what I was looking at. Let me do that here. There we go. There. The rule of thumb is it tries to break to the upside, and after that, when it comes down, if it takes out halfway of the long, narrow rectangle formation, watch out, because it can go right through the base, which is exactly what it did. Went to a trough A, had a good rally back up into the rectangle, but no, my rule of thumb is that sometimes in the rectangle formation, the move down is so quick that it's like the price forgot to say goodbye to its friends. It quickly goes back to say goodbye to the friends and then continues down. Well, it hit the 200-period moving average and rallied. I'll be back in a moment. Dow's up 267, S&P's up 58.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
I'd like to go straight to the TLT. I had a number of questions about it. So the TLT is in leg C. This is the iShares 20-year Treasury Bond ETF. Look here in the monthly chart. This is the purely technical picture. Oh, I should have straightened that out there. There it goes. I like to join the outside of all the wicks or the bodies. That works perfectly right there. So the monthly chart had a Chapman wave inside track propellant zone. It went to for the first time in months, it went to the very bottom of it last month. It touched it and nicked it by a tad. It went down to a low of 91.85 on the 24th of August. Now it's trying to rally. To fill this candle right here is going to take a tremendous amount of work. Look, made lower lows. Look at this. This is like a single leg A to the downside, even though it was G/C. Going from the high that was made on the week of the 5th of August. 120.69, closed near the low at the low of 115. And look what happened. Just down, they had the dreaded H pattern, continued down, single leg A, and now it's trying to have a rebound. The weekly chart shows 99.52 is the pink 9-period moving average. Unbelievable amount of work has to be done for this ever to close positive. Above the black 14-period moving average of 102.30. MACD is very close to trending. Look, the histogram's improving. Stochastic's improving, but still horrible at 14%. On-balance volume's terrible. A lot of work needs to be done. But on a short-term basis, I suspect that the the first candle of importance will be 99.66, the high of the 17th of October. And then you just go sequentially to each one of those lower highs from the 11th of October. The high was 100.90. So what I would normally do, I had drawn this in to say there is no V-shaped pattern, but we've got to consider that the arch. Remember, I'm always saying, watch our two patterns vie with one another. Oh, I have to do this right now as we are talking, because I said to the in the den, I said, watch the 200-period moving average. This was before at about 9:45. The E-mini was at 40.19, and the 200-period moving average I had said was, what did I type into the den? That doesn't matter. I'll tell you what it is right now. It was at 40.19. I think I said 40.18. So it dipped a little bit further. It went to 40.15 or 40.14, and then it ran. What I said is, dippeth, then ploppeth. So it dipped, it tested the 200-period moving average, ran up in a beautiful left side, right side price time match. Remember, I talk about bar symmetry, looks like a T. It went to a peak C and then failed. Well, it hasn't failed yet because it hasn't taken out the low of 4,015. It is trading right now at 4,018 underneath the 200-period moving average in the cup formation. This is, I especially did this earlier. I wasn't up at the time, but I update my charts. I was up at the 640 time frame. And what I like to show is how often you get this incredible, look at this symmetry here. I'm going back to the TLT in a minute, but this is live, so I like to do it live. I like to explain things so that you can tell the technical aspect that I'm looking at, because it gets tested immediately. It's either right or it's wrong. So in this particular instance, the peak D that was made about 6 o'clock pulls back to a trough E. And then I said, this looks very much like you have an equal move to the upside. And I drew in a left side, right side, price time match, the bar symmetry, going to 718 to test the high of the 4 minutes past 6 a.m. at 39.9875. And then I drew in the Chapman wave inside wedge target resistance line, and that said that at about that level, about 715 or so, that's where we should be testing that, because all the resistance levels of the Chapman wave inside wedge target resistance line, that's this green line, dashed green line right here. And look how each one was met. 3 times right there at about 7 o'clock, pulls back sharply under the 200-period moving average. I actually thought, oh my God, this is going to be over. But then it just, for one bar, it went pink, negative, and then back to blue, green. And look at this. It tested exactly at peak D and E, the resistance line, pulls back, and finally makes it 2 bars later. 2 minutes later, over a period of an hour and a half. I think that's pretty good. That's a pretty darn good technique. And then what happens, it stays green with the 9-period moving average, goes peak A, B, C, D, pulls back, makes a cup formation. I drew in the arch. I drew in the time symmetry right here, and it didn't get down. This one didn't work because it was in a rectangle formation, which says you can pop to a peak D or E above. Watch out if it comes down, because it should take out the support level. When it tested it, then went to a brand new ABCD, pulls back. I used the phantom peak right there. Pulls back, and then we just waited, and then bam, you got this. So yeah, all the techniques, this is live, and I'm telling you right now that we're going to see how this tests the 200-period moving average. You don't need it until you really need it. And look what happened. There it is. It held at 4 bars, and now it's running again, trying to make a cup formation. Okay, live. I like that. That just shows all these techniques, what works, what doesn't work. So that says in the manner in which I would take a left side, right side prime time sequence right there, I would first be a little conservative and say that's what I'm choosing, particular candles or a particular pattern. And how do you get it to work? Well, you don't get it to work. You just do your homework and see if everything fits according to the plans that you have. So here it is. I've got the daily chart, move it 2 bars to the right. There it is. And it says by the 22nd of November, there should be a test of this high of 99.66, I think I said. Whoops, I'm sorry. 100.90. 100.90, the high of the 11th of October. And it's trading at 98.81. It's in leg C. You can pull back and then make a D and fail underneath it. But I'm saying that this is what I would be looking at. Then I would take this particular trend line, I'd move it to a very important point of importance, and I'd draw in the Chapman wave inside track target resistance line. I make it green. You don't have to have all these colors. I just do this. In fact, a lot of the time I do a naked chart. I don't know how to do it right now because I know the patterns. And I'm sure the same as when any of our wonderful technical hosts are doing their work, the patterns that they've followed the most, they just visually see it in a split second. So that's what you want to learn to do. So that says the first resistance, either today or tomorrow, is 99.40. Oh, it's still quite a bit up. And then the next day is 99.67. So those are resistance levels. If the TLT in the next 2 days takes out 95.90, oh, is that 90? Sorry, 96.91 by Friday. That's it. We're stalling and we're going sideways. And all you can do is say, I'm looking at an arch pattern. There's a second potential arch pattern. There are 2 fighting patterns. The technicals are good, and it should work its way up. But I'm prepared that if there's a pullback, you get another arch formation. I'll be back. Dow's at 318. We'll be back in a moment.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back. So the TLT has this pattern. This is the pattern, the dreaded H pattern, comes straight down. It's a mix of 1 and 3, makes the arch formation, folds over at peak A or B, and tests the left side low and takes it out. That's a very negative, and you can have a 1-to-1 from the arch high to the base to the downside. So we're looking at this right here. We've already gone under the 50-period moving average. There's the H pattern, made a peak D. Remember, the 4th highest peak in the Chapman wave is always what we're notating. Rallies up, fails, comes right down, and now it's at 37.92. The high was 4. I should have typed that in. I'll do that right now. 43.33. 4.333 was the high. 43.33. That was around about the 23rd or so of October. And look where we are right now, 37. These are yields, folks. These are big numbers. Okay, so I just want to finish up with it. That makes me still positive on the TLT. Next thing I was asked about was rig. So rig, I'm calling this a leg. It could be F/C. And the reason why I have the alternate count is because the 9-period exponential moving average is so powerful. The MACD's 9-period differential, that's basically like a 9-period moving average. It's a combination of the 26-period exponential moving average, the red one, plus the difference. This is the histogram right here, shows you the difference between the green and the red lines. So what we're looking at is it's still positive. So I thought the best thing is always just to keep it in sequential notation in the Chapman wave, knowing that there could be an alternate count, and you've got to count that little peak over there under the peak D as a gray A. In other words, it might be counted, it might not, but you've got to put it in as an A. So this is A with an E/B and an F/C. And that says we should pull back and make one little pop to the upside in a rig. And then I think it could take not a sell off, but a bit of a breather. It keeps having these breathers. Look, my rule of 1, 3, 6. Well, look, this one took 1, 2, 3, 4. The 6 bar rally to a new recovery high. It took 1, 2, 3, 4. The 5th bar went to this recovery high. Acting really well. I wouldn't be even considering shorts in this particular sector. Rig is Transocean Limited, offshore drilling, oil and gas. Let me just look at the notations here. I'm going to pull this to the side right there. This is the daily. Yeah, so it made a peak E with that cup formation with a slightly higher high. We were once long at 390. Oh, I forgot to put it in. We took a little bit of a loss. I can't remember if it was a little gain, a little bit loss before we got taken out. And then it plunges all the way down to 233. So in this particular context, let's see. Later on we got in, and then we got stopped out. Now it's gone from the 3.90 area to 4.52. Well, that's what happens sometimes. So this is that beautiful cup formation, and we've got extension. Yeah, it's like 3 extensions to the upside. Should be getting to some kind of resistance, but it's moved so sharply above the 9-period moving average of 3.53 that I would have to say 4.10 to 3.90. If it had really pulled back, that's probably going to be pretty good support. That'll be the big test. If this one pulls back, then you've got to expect Schlumberger, also SLB in the same kind of area. Look at this one. It's gone to recovery highs. Beautiful action. It's up a penny today. It's at a D, and this looks to me like an E. It's just, you can see the arch formation forming. I just love the way, it's like nature. It's almost like, you get your fall, you get your spring. I remember I drew a cartoon years ago. I can't remember which magazine I sent it to. I used to be an illustrator cartoonist, and I drew this. I had a whole financial thing, cartoons. They're in my CD book. Some of them in my introducing the Chapman wave methodology, and I had this lady was walking along, and she's all bundled up, and you see the tree, and it has like 2 leaves on, and then 1 leaf starts to pull back, and she said, "Oh, the fall. I hope that's not a market omen." Right. Well, that's what we tend to get sometimes in the fall, and this is a leg E, and you can see there are 2 things that are going on. One is you've got Chapman wave inside track, almost symmetry here, going to the high. Chapman wave inside track repellent zone. You've got a potential for an arch formation like this. And all it says is, at 54.03, leg F in the monthly chart, just a spectacular move from the lows of 10. It's a five bagger. This is where you would expect, and it's gone to a leg C. It's only a leg C in the weekly chart. That's unbelievable. You can expect some kind of a digestive phase, and that's all I'm saying. People say, what are you saying about it? I'm saying, look, XLE was another question. I did it yesterday. Got a G/C. That means it could just have a quick pop to the upside for a D, but the technicals are starting to weaken. Look, the MACD is a little bit weaker, not unbearably. It's just the 9 is under the 14. The stochastics under 80%, on balance volumes a tad overbought, but the 9 at 91.70, and this thing's trading at 93.42. That's your first support, and then 90.63 is the black 14-period moving average, and 88.69 is the 50-period moving average. So you can expect, I'll even put this in, and we'll look back in about a week and say, hey, what happened here? Let me just start doing this over there. Remember, I always like to go to doji candles or gaps or something as your kind of support level. And look what's happening here. It's not a crime. It's just one of those things. It's getting a tad overbought. It's now struggling to have those big candles that it had before. So the XLE is in this period that says, yeah, take a little bit off. And maybe you want to put it back at some point because only leg C in the weekly chart, leg F in the monthly chart's leg F. The weekly chart is in leg C, and the MACD and stochastic, everything is good. So this is where maybe you take it maybe 4 or 5 points lower. You can put it back down. You've garnered a certain percentage as insurance. That's all. So that's the next question came in. Yeah, so RIG is actually the chart of RIG is a lot better than the others at this particular point. But if you look, not in the daily, but if you look at the weekly chart, you'll see that it's made this, the arch formation, dreaded H, if it's successful, can become a beautiful cup formation and if it closes above the arch high, which is done, it's done now for 3 weeks. That's a very big thing. My target on the upside would be this crazy candle of the week of the 10th of June, that went to 5.01. It's very close to that. My target doesn't mean to say today or tomorrow. It just says that would be the upside target. Why? Because if it starts to break above that, that monthly chart is going to improve a tremendous amount. So that's RIG, Transocean Limited, offshore drilling and oil and gas. Next question I had was fuel cell. So we're going from the energy consumption to the energy generator. Fuel cell energy, electric service company, natural gas and biogas. What we're looking at here is leg E. This is a great move. This was on my list, one of the stocks that I wanted to get, low price stocks. We've had others, but this was one of those. And I like it, but I think it's about to come into some kind of resistance. It's at 3.89. Nothing wrong. Would I add to it? Yes, I would add to it if it had to pull back from 389 under 360. I'd probably say that's where if you're a little nervous, this is where you could take just a tad off at 389, 390, but be prepared to put it back. I'd even say you could split at 360 and under 350. I'll be back in a moment. Basil Chapman, Dow's at 310.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so look at the bounce that we got from the 200-period moving average and the 1-minute chart. Remember, it could be anything you're following. Let me just do this. I wasn't going to, but I'll just do it now. Let's just say we were looking at, maybe I'll go to gold. Yeah, a rectangle, you don't have to do any homework at all. You just look at this and you say, wow, a rectangle formation can last a lot longer than your patience. And you can just grab the left side over there and say, whoa, look at that. But even more important, you can look at the pattern and say, look at the 200-period moving average, how it was resistance. And now what you can do is say, the idea of the Chapman methodology, especially if you're looking back, it's very easy to say this is the low. When you're over here, can you put the up arrow? You can't. You have to start off with an X saying maybe this is the low, and then you can go above, and then you say, oh, now it's crossed over positively. I'm going to make that a buy signal that's a buy signal. And then it goes to peak A, pulls back, and holds nicely, and then it stalls, and then it has another little peak. Because this is lower down, that's your starting point. So every peak needs to be counted. That's an A, that's a B. Oh, and then all of a sudden it goes green, and you can say, hey, maybe I've got a buy signal. And then as it moves up, you can say, hey, that buy signal has been upgraded to a buy mode. There should be at least a D. But it's still within the narrow rectangle, and a narrow rectangle can last a lot longer than your patience. Finally goes to a D. You watch it closely because it has to go outside of the rectangle high to actually confirm that if it pulls back after that, it could go underneath the support level. So here it is, and it barely just tests it. It goes to an E right here. Where does it stall? It stalls at the 200-period moving. Did I need any Fibonacci? Did I need all those lines that I put in? Did I need Chapman methodology? Did I need balance? Did I need on-balance volume? Did I need anything? No, I just needed to see it hit that line, and that line was sitting there. It was absolutely useless at one point. Now it's really important. And what happens is that gold then pulls back away from peak E, and the rule of thumb is in the rectangle, if it takes out the midpoint of this rectangle, there's a really good chance that not only will it test this rectangle low, it could go below it. So gold is now -3 at 1774. Maybe we'll have a chance during the show, because it's a 1-minute chart, to follow it. That's the methodology. Simple. Not a big deal. But in the meantime, back at the ranch, a question came in about FXI. Yeah, what I'd said is that China should rally here because it is so oversold. And this is the iShares China Large Cap ETF. Let me just do that. Click. There we go. This is leg C. It's going to the left side target of the 5th of October of 27.39. Today's high is 27.06, and this is only leg C. It's only a leg A in the weekly chart, still with very poor technicals, but the MACD is about to cross positive, and the price actually has gone above the 14-period moving average. Let's forget about the monthly. It looks just gross. So to go with that, question came in about XPEV. Isn't this the China internet. Yeah, this is the XPeng Inc. Oh, I thought I'd written that in. Is this XPEV? Is that the China? Let me just have a look. What was the question? No, it doesn't. It just gives me the price. Yeah, I think that someone will tell me that XPEV. I believe it's the China. I think it's the internet. Anyway, it's gone to a peak A, pulls back, peak B, and this says it should, over a period of a week or so, try for the high. It's at 9.16. It should try for 10.18, the high of the 12th of October, and it should do that by the 17th, 16th, 17th. Yeah, by the 17th. All right. Got that one done. Chinese EV. Oh, electric. That's right. EV car. I knew it was one of those esoteric areas. This is EV area. Thank you very much. Duffy always comes up with the answer. So, Dan did. Okay, very good. Thank you. Both of you guys are. No, both. Oh, it was Duffy first at 10:46 a.m. Duffy comes into the den and he puts in XPEV. XPeng Inc. is a China-based company engaged in design, development, production, and sales of smart electric vehicles. At 10.46, that was seconds later, A2B comes in and says XPEV, Chinese EV company, I believe exactly Duffy. At 10.46, China stocks are all hot today. 10.46, all of this within a minute. A2B says, you're fast. Duffy says, quick draw. Oh, man, coming around the corner of the first bend. Very nice. Okay. So the den is just a fantastic medium, folks. I mean, there are people there that give so much absolute pertinent advice. It's really fair. Showdown at high noon. Well, not quite high noon. At 10:45. So let's go back to this. So the question came in. I did that. Oh, I've been meaning to talk. I have mentioned it before, and I said I would follow up, but I haven't really followed it up. I don't know about you, but I'm seeing more and more every week. It's almost every day, but it's every week. Another country has started to go for the super tall skyscrapers. I mean, you know my skyscraper theory? That's the reason why I've been so looking out. I say there is just a chance that we have made a peak B in the S&P and that we're going to go to a C and a D by 2023, because I've never seen Egypt. I mean, Cairo, I believe, is building a super tall building. I mean, that's almost impossible to believe. You've got Israel. You can go around the world. Countries that never did this sort of thing are starting to do it. Even cities in the United States that never had anything. Texas, there was a super tall building coming up in Texas. The skinny, they call them skinnies. I like skyscraper. You can call them skinny skyscraper. You got to use the word skyscraper, otherwise it doesn't make sense. So isn't that amazing? So what we're looking at is within the context of CWEB. Oh, thank you very much, Roy. Roy in the den. My grandson's name is Roy. CWEB. That I couldn't understand why it wasn't notated. Oh, it's not notated here either, because I had written it up here in my charts. I must have lost it somehow. CWEB is the China Internet. This is the, I don't know if they call it an ETF. Yeah, it's an ETF. Up 17% today at 41.39. Peak A, peak B. Yep, peak B, peak C, and leg D. Oh, how many Ds are we getting here? But awful low. You will get your Ds. But I'm suspecting that we're in for a little bit of a digestive phase right now, and it's rotational. So it could be that China continues to move up, and I'll do ARKK. Let me just see. Remember what I did in the gold? Well, there it is. That was live. I mean, you couldn't do anything better than this. This was live. I discussed this with you. I said gold, if it takes that halfway into this rectangle pattern, should retest the lows. The low was at 9:50 this morning Eastern Time at 1771.3, and we're trading right now at 1771. 0.4. Excuse me, by 1 penny, but the minute isn't finished.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So I'm thinking that I've done this hour at different times of the day, but it might be my continuous hour. It's almost 20 years, and I've done pretty much the same thing analysis every single day. I want a little difference. So I'm going to do for the rest of the week, I'm going to include quite a chunk of this live stuff. Look, there's nothing here that you haven't seen me do over and over again. Look, here's the arch formation. Where would I choose the left side, right side bar symmetry? Right on that bar there. Did I not draw the peak, the arch over here and say peak C over there, peak C over here? It should mimic the same pattern. And I drew this in, and I drew in this rising trend line support. It went under the 200-period moving average. And then with 1 minute to go, it was a minute early on the left side, right side price time match. It went to 4,013.50 on the E-mini. What was the low on the left side? 4,015.00. I mean, you can't make this up. It was live while I was showing you. Let's see what the gold did. So I think I'm going to do a lot more of this. Just I need a break. I'm just having it for fun. And here we are. What's the rule of the rectangle? It can go towards the, once it breaks halfway, it can go to the base, that trend line support, which is actually now here. And that's where you want to see what happens, because if it goes under it, it'll go under it, then quickly pop back to say, goodbye, everybody. I'm sorry I didn't have a chance to say goodbye. And then it goes down. This one held beautifully on the left side. And look, there's the arch formation. This is the lowercase h that goes to a lowercase m. So that's kind of fun. All right, so let's just say that we're going to wrap it up here. I'm going to hand you over to Steve Rhodes, who does fantastic work. Of course, he also uses some part of a very small part of the Chapman wave. He does it very successfully. And he's got all these other techniques, and you've got programming all the way through. Everybody has their own speciality. It's fantastic here at TFNN with all the different hosts and different techniques. We're looking at the Dow 333. And I'm watching this closely because I'm just wondering if towards the end of the day there isn't some kind of a pullback, maybe in the Dow, but maybe the Q. We'll watch this closely. Holds a little bit better, but it has gapped up today. You've got to monitor this closely. Have a wonderful rest of the day. Check out my opening call, my day.